Join us to talk markets as we approach the opening bell on Wall Street. Brenda Vingiello, Chief Investment Officer at Sandhill Global Advisors, also a CNBC contributor. What's most important? You saw ADP, you waiting for jobs and Powell, Brenda?
Yeah, I think the jobs number is certainly going to be important, but next week is also going to be really important when we get more of the inflation data that I think we've been waiting for with CPI and PPI. But I think in general, we don't expect to hear a lot of different speak from the Fed. We're still in an environment where the economy is quite healthy, and we think that rate cuts are probably not coming until June at the very earliest, and possibly even later than that. But in general, the market is off to an incredible start this year. So around the edges, we are actually trimming a little bit of exposure here. When we started the year, we assumed we would get a return that was probably in line with what corporate earnings growth looks like for the S&P 500 this year. And those projections are around the low double digits. But we're already 60% of the way there, and it's barely March. So we think it's a year that it will be important to be disciplined.
Brenda, is tech a buy here? Will the leadership, will it reassert itself, do you think? Or are we seeing finally some broadening or a rotation out of the very narrow, magnificent, whatever you want to say, 5, 6, or 7?
Yeah, I think it's been refreshing to see that there has been more broad participation over the last several weeks. But when we look at really what's driving corporate earnings, there's no doubt that a lot of those large cap tech companies are. And it's top line growth in addition to this focus now on more profitability, where we've just seen some really surprising results. I'll just call out Meta, for example, where profit margins were 7% better than expected during the fourth quarter. So there really is a powerful earnings story there for many of those companies, and I don't think that's going away. But I do think as the year goes on, we would expect to see more of a broadening in participation, especially once rates actually start coming down. And we think areas like small and mid-cap stocks are really poised to do well in that sort of environment, assuming that the economy remains relatively healthy.
Okay. Perfect time to end it, since I have no time, Brenda, but we appreciate your insight and your thoughts this morning.